Welcome back, everyone. Today, I'm going to be going over my portfolio to give you a quick update on how it stands. Currently, the portfolio sits at $16,631. I have changed a few of the positions in my personal and RSP account that I will be going over today. I'm going to be keeping these updates a little bit shorter, so let me know if you like the short content or a little bit of a longer form update. The first account I want to go through is my personal account. This is the taxable account that I currently hold about $500 US in. I deposit $20 weekly into this account as I want to focus more on the TFSA and RSP for tax advantage purposes. The only holding in this account is Berkshire B. I currently purchased another share of Berkshire B, giving us a total of $443 American. We are currently up 9% on this holding all time, and we hold $52 American in this account. In the future, I want to grow this account to be the main account that I track and buy holdings with. But that'll be a long time after the TFSA has been maxed out and we have that on a solid trajectory. The other account I want to go through is the RSP. It also is a USD account. It currently holds about $1,750. There's a few holdings I want to go through today. The first being LQD, which is actually a bond ETF. I have not held any bonds in my portfolio, but since this is a retirement account, I want this to be more stable than a normal portfolio. So including a mix of bonds and stocks, I think would be justifiable for this account. It might not grow the same amount as maybe a strictly stock portfolio, but I want this to be able to withstand harsh economic times that I don't really have to worry about in the future, and I won't have to monitor it as closely. So LQD should bring down the volatility a little bit in this portfolio. It is an investment grade corporate bond ETF, so it's not government bonds. It holds company bonds in America, such as Apple and Microsoft and some of the bigger tech companies. The next one is QQQ. This is a NASDAQ ETF. It is ultra growth and it is very volatile. SCHD is a dividend focused ETF that pays monthly dividends. It's currently traded at $75 and we have 3 shares. This is going to be a holding that I switch between SCHD and SPHD, which is a low volatility dividend ETF. I will go over these allocations in my spreadsheet so you can see it more clearly about what I'm planning on doing with these holdings. The next two, VOO, the S&P 500 ETF. This is a S&P 500 index ETF and it follows the S&P 500 obviously. This is one that we will be averaging into. It is also a growth one, but maybe less volatile as the QQQ NASDAQ index. The VTI is somewhat more in between the VOO and the SCHD as it holds more of a broader based, maybe some companies that are found in the Dow Jones. This will be less volatile. This will be a holding that I will likely change in the future, but we'll see how this pans out. As of right now, it is fine how it is. I currently have $38 in this account. This is one I invest $300 monthly in, and we are looking to compound this with a low volatility style. So let's get into the spreadsheet so we can see the allocations a little bit closer. So in my spreadsheet, you can see that the account value is 16,600 and our contributions are somewhere just above that. In the future, I want to be documenting my portfolio and contribution amounts and comparing them on a week to week basis so that we can see how much money we are actually making in these accounts instead of just looking at unrealized gains and our dividend growths. So I want to check out the allocations of those ETFs I just discussed. In my positions tab, we can see this is the whole portfolio right here. I've allocated certain percentages to each individual holding. SCHD has 7% allocated, and you can see that that is one of the larger holdings as some of the other ones are only like 4 or 5%. Berkshire B sits at 2%. QQQ sits at 1%. SPHD is one of the other lower volatility dividend ETFs that goes hand in hand with the US dividend equity ETFs, SCHD. When the markets are higher, I'm going to be rotating funds out of SCHD and into SPHD to preserve some of that wealth and capital, but also staying dividend focused. BNDX is a holding that I have not entered into, and that is also another bond ETF. It is a total international bond index, so a little bit more broader and not in North America. That is why I have allocated 2% into the corporate bond ETF, which is strictly North American bonds. So I will only allocate 3% of my whole portfolio into bonds as I am fairly young and want to concentrate most of my money into stocks. And VOO and VTI sit at both 5% each. And this is something that I will be looking into if I want to hold both VOO and VTI, since there is some overlap between the two of them. In this actual allocation column, we can see what the portfolio actually stands at. So holding one share of QQQ ends up being 2.26% of the portfolio currently, so we won't have to buy much of this in the future. Berkshire B sits at 3.6, and that is also higher than our allocated amount. SCHD is at 1.86. So as we input more funds into our portfolio, we can put these funds into our underweight areas of the portfolio, such as SCHD. With just under 2 shares of VOO, it's right at 5.6%. So I won't need to invest any more into VOO until we diversify the portfolio in other areas. So in saying this, the RRSP and the personal account are the only ones that hold US equities. And going forward, I have to be able to manage the amount of US holdings I have with my Canadian ones, as eventually the TFSA will be maxed out and we will have to invest our funds into other ones, whether it's the taxable account or the RRSP, which does give preference to US equities. Let me know how you like this video, and if you want it more of a short form like this or a longer form, let me know and I will adjust accordingly.